Hey guys, today's Saturday, May the 20th of 2023, and I want to go over natural gas. Without any further delay, let's get into it. As you can see, I've highlighted a little area which I'm called the bears are waiting for us. You can see the market profile, volume profile is indicating that. So that area is going to be anywhere between 291 all the way to 308. There's going to be some resistance there. In regards to the market profile for support, we got support all the way from 250 all the way to 231, as you can see right here indicating, and that's going to be an area of support. So we pull back, that could be a possible good area, for dipping in your toes in again and maybe riding another wave higher to test this high in this area right here where the bears are waning. If you look at volume, Thursday was really good. We exploded to the upside, but then Friday there was big volume. But you know who took it? The bears took it. The bears were very aggressive. Let's see how Monday is going to play out. But so far, the bears took Friday. We got Thursday. So let's see how that's going to play out. Let's go over here to our what I call the simple glance chart. Everything is looking good. Hockey stick is getting better. It looks like we're going to get a buy signal on the monthly, which is good. Kanashi candle on the weekly, white trend candle, white positive. Mobile bands are positive. We're above the 20 on the weekly, so that's all looking good. And on the daily, what concerns me is that we are hitting the linear regression channel, so it's a little risky to start buying here. If I were you, I would probably wait for a little pullback. Areas to watch would be that 248. That's the 50% value area high, which is 252. And if it wants to penetrate the cloud, there's some areas right here. You can find 238 all the way to like 230. And here it's going to get a little wild and wonky and volatile. But yeah, it could dip in here. But if it finds support, it shows that, the bulls are defending it. And then we'll push another leg higher. The good news is we're out of the cloud. So that is positive in the short term. Short term, very positive. In the midterm, look at the cloud up here. We need to regain all that, but we're taking baby steps, so that's good. Another positive thing is the cloud is turning positive, so that is also good. That means short term things are looking a little more positive, so that's good. What else I wanted to show you? I think that's it for this chart. The only thing that concerns me is this Tom DeMark knife candle. Sometimes it works, sometimes it doesn't, but I like to see it. And the linear regression channel, we're here. So, if we get a pullback, if we push even Monday, because Monday, trading day statistics, it says it's positive. Let's see how that plays out. But if there's a nice little, hardcore pullback from the bears, that's a good sign because you could dip your toes in and, nibble at it if you miss this move. But if you were waiting for us to get out of the cloud, then maybe this is your opportunity. So when that pullback comes, you could, pick up some, stocks or whatever contracts or whatever you're trading to get some exposure to natural gas. What else I wanted to show you? Let's see. We got some levels, but I wanted to show you the commitments of traders report. As you can see, commercial are selling. So they're hedging. Price action is starting to go up. Commercial are hedging. They took out this low right here, so that's good. Large speculators are buying. They just took out this high, so price action is going on high. Large speculators are buying. Commercial are hedging, so that is what I like to see. It's a positive direction for prices to continue to go higher. Once commercial reverses and they start hedging, or going the opposite direction, then, that could mean that maybe natural gas will start turning down and maybe speculators will start selling. But so far, they're hedging, so that's good. So that's a good sign. Let's look at our mind map real quick. As you can see, 94,000. The low was 95 on March 27th. So we took that out, so that's good. And we have, I think I need to fix that, May 16. It says May 9th. 123. The high was 126, so that's good. We're going higher. Large speculators are buying. The trend is still down. I'm watching the 23rd that's coming out. It's my next important date, 23rd and the 24th. And I think that's it here. Cycles remain the same. They haven't changed. If you see my other videos on Elliott Wave, that's where we at. Those are some targets. If we're going to hit a wave 3 on the daily, and targets for the wave 4. And these are the sentiment indicators that I watch. Let's go back to our chart here. Targets to the upside for the week of next week. If you're a scalper, swing trader, whatever, 279 and 290 for this week. This covers the whole of next week, these levels. Support, we need to stay above 246. That's the main midpoint chart. So those are the targets to the upside. For Monday, 262, could be resistance. If we can't get up there and fail, then that indicates that we can't close up there. Then Monday's going to be tough to push higher. We need to stay above 262. Remember, we're stair-stepping higher. So things are going to start, making it more challenging to stay above it. So price action needs to stay above 262 Monday. If not, the support down at 256, 253, and 249 for Monday. For the week, support would be 246 right here, the midpoint. If we push even lower, then obviously it's going to have to be somewhere around 225. But it could get down there, but we're hoping that at least the 230 levels could hold. As you can see on the videos I posted this week, 260, I think it was yesterday, I was like 260 is probably going to stall it right there because we're hitting the monthly pivots now. And we'll see if we can regain that. But if it's going to push higher, 281, kind of lining up with the 279, 290 around there for this week coming up to push higher. This is the yearly, so I'm not going to mess with that. But so far, we're doing good. We're trending higher, so that looks good. Anything else I need to cover? I did my mind map. I'll show you the commitments of traders report, and let's end it with the square of 9. So we left it here at 268. We could potentially hit 273. 274 lines up with the 199. 194 lines up with the 277. But if you want to push even higher, you got the 281 right here, which is the 270 degree, and then you got the 289. I think it's a 315 right here. So these are possible targets if it wants to grind higher. So possible, but if Monday comes, we bump, and then Tuesday we sell off and all that. Support would be 257, 249, and 241 for support. And I think that's it. But so far, it's looking good. If we're going to push back, this is going to be the area where it's going to start oscillating back and forth. Chopping around, grinding. Hopefully 233, 230 support. Bouncing back up to eventually, push higher to 281 to 289 and get to test 302, which is this high right here, 302. As you can see, 302 lines up with that 199 that we did on February the 22nd, 21st, low. So that's why we stalled from right there to right there. So that's the target. Once we get there, we could go, and then we have to deal with 320 and 323, but that's long term. That's once we get above 302. I was kind of going to give you a glimpse of how I look at this and how I use the Gann square of 9. I'm going to sign out. Hopefully you'll like this video, and I'll keep you posted on my thoughts on natural gas.